Hello guys, welcome back to another tutorial. In this tutorial we're going to be looking at the composition of a signal. So the first thing we want to do is get hold of a signal. In this case we're going to be using the trading signals app and use a sample signal to explain what a signal is made up of. So let's quickly open our trading signals app. There we go. So once we open the app, the first activity we are greeted with is the home page. So let's just move to the signals tab. In the signals tab you can see a number of signals that we post. So these signals are well analyzed by our signals team. So as usual, this is trading. You don't expect them to be 100%. That we won't guarantee you, but we make sure most of them are winning trades. So here are our signals. The first one is boom 300. We're going to use that to explain the composition of a signal. So for beginners, this will be amazing for you because you're going to know what a signal is made up of and how to use it. So the first thing, when you look at a signal, on the top left corner where it's written boom 300, you have the asset. In this case we are trading boom 300. That's the name of the particular pair, boom 300. Then the art represents the entry, and the number there represents the entry point. So the recommended entry for this boom 300 signal is 2090.397. That's the point at which you should enter when trading this. But that doesn't mean you shouldn't enter if you find it has already passed this point. You can always enter close to the entry point, but we recommend entering at the entry point, especially if you are on a small account. On the right side we've got the action that we have to perform. In this case boom 300, we have to sell it, so it can either be a buy or a sell. The red there represents sell, and it's written sell. So what are we doing to boom 300? We are selling it. So when you're creating your order, you're selling. Then on your left you've got the TPs, TP1, TP2, depending on the signal. You can have as much as 5 or even more. So for small accounts I recommend you stick to the lowest TPs, guys. TP1, TP2. Once it reaches those points, the take profit points, a trade closes automatically, then your profit is guaranteed. So for big equity, guys, I recommend that you hold trades up to somewhere TP3. If you can, hold to the last TP, but you know this comes with its own risk. The more you hold, the more risk and the more profit. So the less you hold, the less risk, the less profit. That's how it works. So these are the take profit points. You can set that as you set up your trade. When you're opening your trade, you can set your target take profit. Then we have our stop loss right there. So the stop loss represents a point at which your trade is going to be automatically closed if it doesn't go your way, thereby preventing further loss. So once you set your TP, you also set your stop loss. If it hits your TP, it closes in profit. If it hits the stop loss, it closes in loss. Then right at the bottom there we've got the time at which a particular signal was posted. You can use the time to determine whether you should enter the trade, if it's still valid or not. Then you can also use the entry to determine whether a trade is still active or not. So for example, this one boom 300, our entry is 290.397. If you find it, for example, at 291, it means you can still enter, guys. You can still enter. or slightly below that, you can still enter and apply proper risk management. So this is the composition of a signal. With this, you should be able to trade. I'll show you in the next tutorial how you can use these parameters in MT5.